Good everybody. Welcome to another Tax Tip Live. We're going to get started in about a minute. So get whatever you need to get ready, and we'll see you back here in a minute. Hello again. So welcome to another Tax Tip Live. Like I said earlier, thanks for joining. Today we're going to be talking about home daycares. So it should be a rather simple one today, rather quick. However, daycares because daycares are a business, and we've covered a lot of the different aspects of running a business and what you can write off, what you can't, in prior episodes. So if you haven't seen any of those, please go check them out. A lot of good, useful information for business owners. Now, we want to do a separate episode directly on daycares because it does have a few little nuances or different things that we felt important to share with all of you. Now, if you want, let's get started with receipts. So as a home daycare, you're providing daycare or childcare services to clients and customers. So a lot of them, as you may be aware, childcare expenses are deductible on individual tax returns. So you might be asked to provide receipts to your customers for the services you provided. Now, you can just provide a receipt to your customers. However, there are specific things that should be on those receipts in order for your clients to have it be deductible for them so that they don't have any issues if ever they're asked to submit those receipts to the CRA. So I'll cover all the things that need to be put on the receipt. We should have a slide coming up on, there we go. So what do you need to put on the receipt? So it's very important you put the name of the person you're preparing the receipt for. So that would be usually the parents of the child you're taking care of. It might be a grandparent, whoever that might be. Secondly, name of the child of the person you're preparing the receipts for. So that would be whatever child you may be taking care of. Now, if you have more than one child that you're taking care of for the same family, same parents, you are required, or you should be issuing separate receipts per child. So again, if you have 3 kids that you're taking care of for the same family, you'd have 3 separate receipts, one for each child, and you based on the fee that you paid or that you charged for that specific child. Now, of course, very important, the amount you received for those services, the amount you charged, the period you provided these services. So from and to dates, that might be from January to December. If you're doing a yearly receipt, you would put your name or your business name on there, your address, your social insurance number and or business number, your signature, you should be signing off on them. And then you should also date the receipt. Like I said, these are all the things that should be on the receipt you provide to your clients in order for them to be able to submit them to the CRA and not have any issues. Okay. Now, moving along to the expenses. So like I mentioned earlier, daycare is just like any other business. So anything that you are incurring in order to run your business, generate a revenue, generate a profit, hopefully, you should be able to write off as a business expense against that income. Again, I'll refer you back to those earlier episodes, especially episode 1, where we talked about all those different expenses. Sorry, before I keep going, one thing I forgot to mention at the beginning of the show, we are live. So if you have any questions or any anything you want to ask to me live today, feel free to put it in the message section, and we will try and answer them as we go along. If you are watching this later on and you have any questions, feel free to reach out to me, send me an email or send our office an email, and we'll be happy to ask or answer those questions, okay? Now, in terms of expenses, like I said, a lot of the general expenses will apply. Now, some of the things that are a little bit particular or specific to home daycares, over and above the regular business, is going to be the business use of your home. So because you're using a large portion of your house to run your business, you're operating your daycare out of your business, you will be entitled to claim some of your home expenses as a business write-off. Okay. Now, some of the things you can write off are your utilities, your property taxes, your insurance, water and waste, all those different repairs and maintenance of the property, interest on your mortgage, all those different things that you're paying to your property. Now, the tricky part is how much of that can you write off? And essentially, it all depends on how much of your house you're using. Okay. So if you are using a space in your house that's a dedicated space for the daycare, then whatever percentage of that room is compared to your total square footage of your house, that would be the percentage of the expenses of the property you'd be able to claim. If you have a portion of the of your house or part of your house that's being used for daycare during the day when you're operating, and then at night you're using it for personal purposes, then you'd have to split that that usage between personal and business. And I actually have an example that we'll throw up on the screen so we can go over. So in this example, you're operating home daycare, you have 1,500 square foot home, you use a room or a couple rooms in the house that's used exclusively for daycare, maybe a basement, maybe another room. That square footage of that is 200 square feet. You also have another 800 square feet of your house that's used 50% for the daycare and 50% for your home. So in this case, the daycare is open 10 hours a day, 5 days a week, and 50 days a year. So in this example, you would take the 800 square foot that's being used, half for business, half for personal, times that by the amount of hours you're open per day, number of days you're open per week, and number of weeks you're open per year to get the actual square footage you're using for the business. Add that to the square footage you're using for exclusively for the business, and divide that over the total square footage, 1,500 in this example, and you'd get that 21%. And so in this situation, you'd be able to claim 21% of your housing expenses for the use of a daycare, or for your business as a business expense. Okay. So it should be pretty clear, but when you are preparing your return, or if you're having an accountant prepare it, that's one thing that they're going to want to have from you is not only what portion of your house you're using for the daycare, but whether or not you're using that exclusively for the daycare or partially for personal as well. And then on top of that, the number of hours you're open a day, the number of days per week and weeks per year, so on and so forth, to figure out what percentage you should be using for business versus personal. Okay. A couple other things that are applied to daycares that some people might not think of when they're claiming expenses for their business is claiming all of the supplies, right? So you're buying toys, you're buying maybe coloring books, maybe arts and crafts, all those things you want to remember to claim as an expense on your tax return at the end of the year. Some things some people ask me, well, what happens if I buy something and then, let's say it's a toy, but I use it for the business, but my kids play with it. Well, if you're using for the business, that's a business write-off. If you're using it for personal, then you're technically only supposed to claim part of the expense that's related to business. So if it's 50-50, then you should be claiming 50% of the expense in the business and not the whole amount. that being said, if you're buying toys and it's for the business, your kids just happen to play with it from time to time over the weekends or at night, I'd be tempted to put most of that as a business expense if that was the intent for it. Okay. Another thing is equipment. So we did another tax live session about property, plant, equipment, capital assets, and how that all gets depreciated. So same thing applies here, right? So if you're buying a crib because you're taking care of babies, well, that you can write off 100%. You can write off in the business at 100% if it's 100% for the daycare. But if you're using it partially for the daycare, partially for your own kids, any piece of equipment, like I said, a crib or a computer for the kids to play on, or a coloring desk, whatever the case may be, you're only supposed to claim the portion that's used by the daycare as a business expense. So if you buy a piece of equipment for $500 and it's used half for the business, half personally, then you'd only be able to claim 250. And depending on what the equipment is or what the asset is, you might expense it right away, or you would capitalize it and depreciate it over time. And again, if you aren't sure the difference between what should get capitalized and what should get expensed, look through our library of tax tip live sessions, and we have a full session on that. Okay. Other things that are specific to daycares, well, not really specific, but that would be applicable to daycare that we want to make sure we get across would be field trips. So if you're taking a field trip with the kids, make sure to keep all the receipts for that, for any of the travel, food, admission to wherever you're going, because that you can claim as a write-off. That kind of leads me into the next point, vehicle expense, right? So if you're traveling with the kids, again, those kilometers you can claim as a business expense. You just want to make sure you're not claiming any personal kilometers as an expense, okay? I mentioned it in the field trip part, but food, right? So running a daycare, you probably will be feeding the kids at some point in time, either it's snacks or lunch or whatever the case may be. You want to be able to make sure you keep track of those expenses and write those off against your income at the end of the year. Now, that's kind of where we get a lot of questions from our clients is, okay, well, how do I keep track of that? How do I know what to write off, right? Because oftentimes the food bills, you go grocery shopping, you buy stuff for the daycare, but you also buy stuff for your family as well. You might be using, you have a carton of milk that you drink out of, your family does, and also you give to the kids. How do you split that up? Well, CRA's position, or when you read through CRA's information, they talk about how you're only supposed to claim the portion that's for the daycare that you're providing through the business. So really what you should be doing when you look at that is just claiming the percentages of, or just claim the foods that are used in the business. And if it's, a carton of milk and using half and half, then technically you should be claiming half and half. Now it gets really tricky in those cases because, people don't have two fridges normally, one for business and one for personal. Everything will be lumped in together. So what a lot of people have done that I've seen over the years is they will claim something like 20% of their revenues as a food cost. And CRA normally will be lean enough if you have some sort of methodology on how you got to that percentage and that it's reasonable. So I kind of go back to 20% because that's what I've seen in practical senses. If you're just using a percentage like that, it opens you up to questioning, opens you up to review from CRA, and you need to be able to justify that. So what I would recommend is keep really meticulous records and track of your grocery expenses for maybe a month or two. If you're seeing a pattern that, it ends up being 20% of my revenues, then you can go ahead using that. And as long as you can fall back on some sort of reasonable methodology that how you arrive to that number, then you should be okay. Where you can get in trouble is if you just pull a number out of thin air, or if you're asked by CRA how you got to that, that methodology of getting 20% of your revenues as your food expense, and you just say, well, I don't know, I just pulled out of thin air. Well, that's when you get in trouble, right? You need to be able to get back or go back on something and how you got to that original number and how you came to claim the expense that you claimed, okay? Other things that could be applicable that we see sometimes if you are, doing a type of laundry, well, you might want to claim part of your laundry machines. Something else that could be applicable would be wages to family members, right? So you have kids, they're in school, they come back and they help you clean up around the house after all the kids from the daycare have left. Well, it's reasonable to give them a small wage for the work that they do to help you. Or if your spouse helps out as well, either with the actual running of the daycare or just managing the business and doing the books, whatever the case may be, you can pay them as well. And that's where you can get into some opportunities for tax planning and split income legally and ethically by paying wages to family members for the work that they actually do. Okay, so those are a couple of things that I want to kind of go over that run specifically to daycares. So like I said, it'd be a shorter one today. Kayla, I don't know if we have any questions from any of our viewers at the moment.
Hey, Dan.
Hey.
So that was some great information. When you were going over the required receipt information, all those bullet points,
yes,
we had a question from Lauren asking why the SIN number is required.
That is just one of the requirements that CRA has for